Right now, thousands of students they're dedicating 25 hours a week to studying for 2 exams, and the data tells us a massive portion of them are mathematically guaranteed to fail both.
Right, because they paired the wrong syllabuses. I mean, they chose their exams based on scheduling convenience rather than, structural alignment.
Exactly. If you are allocating your capital, which right now is your time, you have to demand a measurable return on investment.
Yeah, and the ROI we're targeting today is maximum study efficiency via syllabus overlap. We are breaking down a very hard metric here.
We are. Passing 2 exams in a single window by exploiting structural redundancies. This strategy is engineered specifically for you, the high-performing professional executing a rapid completion timeline.
You're completely bypassing the standard sequential study method, right? You're implementing the synergy principle, which is basically 1 + 1 = 3.
1 + 1 = 3. Break down that math for us.
Well, it's the foundational math of this entire execution plan. When you pair the correct exams, studying the syllabus of paper A directly subsidizes your knowledge base for paper B.
So you're double counting your study hours.
Exactly. You learn a complex concept once, but you earn marks for it across 2 entirely different exam papers. But the inverse is also true.
The friction.
Yeah, the friction. Pick the wrong papers, and you trigger severe cognitive friction. You aren't just adding workloads together. You are multiplying your failure vectors.
Because your brain is being forced to process conflicting methodologies simultaneously.
Right. And that structural friction is honestly the biggest silent killer of exam progress we see.
So we're going to map out exactly which papers create that 1 + 1 = 3 synergy, and exactly which ones will just, burn you out.
But before we deploy the specific syllabus overlaps, we have to look at your personal balance sheet.
Yeah, the qualification phase. You cannot enter a dual paper exam window unless you meet the SmartPass hard decision metric.
It's a strict 2-part entry requirement. First up is the time variable.
Right. You must possess a guaranteed 15 to 20 hours per week of uncompromised, distraction-free study time. And that has to be over a continuous 12-week prep block.
We really need to dissect that 15 to 20-hour metric because it confuses people when they look at the baseline data.
Because a single paper is usually 10 to 12 hours, right?
Exactly. So logical math suggests if you take 2 papers, you just double it. You should need 20 to 24 hours.
But because of the syllabus synergies we're about to map out, that overall requirement compresses.
It drops down to 15 to 20 hours. You gain this massive efficiency discount. But, and this is a severe warning, if your capacity drops to 14 hours or below, the entire model breaks.
I want to focus on that failure point.
Yeah.
Why 14 hours? I mean, if you're putting in 14 hours of genuine, focused work, why does the data say you're going to crash?
Because at 14 hours, you are splitting a deficit. A split focus below 15 hours mathematically guarantees a double failure.
Wait, so you don't even pass one and fail the other?
No, you fail both. And the reason is the cognitive bridge. When you're studying overlapping topics like an accounting standard on Tuesday and the audit of it on Wednesday, your brain needs volume.
Volume of exposure to keep the connection alive.
Right. If you drop below 15 hours, the gap between study sessions just becomes too wide. The context evaporates completely.
So you end up spending half your study time just trying to remember where you left off.
Exactly. Instead of actively building that cross-paper synergy. So the 15 hours is the absolute floor to keep the momentum going.
Okay, so that's the time metric. The second non-negotiable requirement is the foundational baseline,
which is a historical score of 55% or higher on your immediate prerequisite papers.
Specifically financial accounting or management accounting. And you must have achieved that 55% on your first or second attempt.
Think of it like corporate capital allocation. You can't fund 2 major expansion projects if your operational cash flow is already in the red.
Your study hours and your foundational knowledge are your operational cash flow. But let me push back on this 55% threshold for a second.
Okay, go ahead.
I'm looking at this and thinking, well, a pass is a pass. If a student hit exactly 50% on financial accounting, that's a clean pass.
Right.
So why can't sheer willpower, maybe an extra 5 hours a week, bridge that tiny 5% gap during the dual prep?
Because a 50% score is not just a slightly lower number, it's a vital diagnostic indicator of structural knowledge gaps.
It tells a story about how you passed.
Exactly. It means you likely guessed correctly on a few margins, Or, more dangerously, you completely abandon major complex areas.
Like consolidations or cash flows.
Right, and you just scraped by entirely on basic double-entry bookkeeping. Now, in a single paper prep, you might have the luxury to go back and rebuild that foundation.
But in a dual paper execution, the syllabus just moves way too aggressively. You don't have the runway.
You don't. That 50% foundation will immediately collapse under dual time pressures.
I can see that. Imagine trying to learn advanced group accounting for one paper and audit risk for another, but you have to pause for 3 hours to relearn basic debits and credits.
You cannibalize your own 15 hours. I mean, willpower is a fantastic trait, but it cannot substitute for foundational architecture. You have to be deeply objective about your baseline data.
If you don't have the foundation, don't build a 2-story house. But if you do have the 15-hour capacity and that 55% baseline, you are cleared to deploy.
So let's get into the assets. Let's move directly to Golden Pairing A.
Financial reporting, or FR, paired with audit and assurance, AA.
The strategic concept here is total alignment. It's the alignment between execution and independent verification.
The source material has a great quote for this. You cannot audit a financial statement balance if you do not understand the underlying IFRS and IAS rules used to build it.
That sentence is literally the core synergy of this pairing. FR is the construction of the building. AA is the inspection of that building.
Let's look at the mechanics of this. The first major technical overlap is asset impairment under IAS 36.
Right. So on the FR side, your requirement is highly mechanical. You have to calculate the recoverable amount of an asset.
Which means taking 2 figures and comparing them.
Exactly. Figure 1 is the asset's fair value less cost to sell. Figure 2 is its value in use.
Value in use being the mathematically discounted future cash flows that the asset will generate over its life.
Right. Whichever of those 2 figures is higher becomes your recoverable amount. And once you have that, you compare it to the carrying amount on the balance sheet.
And if the recoverable amount is lower, you have an impairment, the asset lost value.
And then the FR exam makes you execute the structural allocation of that loss, writing down the asset, recognizing the expense. It's rigorous math.
Now visualize executing this dual study process on a Tuesday night. You just spend an hour mastering that precise IAS 36 calculation.
You understand the math, you close the FR book, and you immediately pivot to your AA material.
And the AA application takes that exact same standard and weaponizes it.
Exactly. The auditor's brain looks at IAS 36 and instantly sees the audit risk. You aren't memorizing a new concept, you're just shifting your perspective.
Because you know corporate management has a massive vested interest in not impairing the asset.
Right, because an impairment hits the income statement immediately. It destroys current year profit.
So the risk leaps off the page for the auditor. Client asset overstatement and operating expense understatement.
And from identifying that specific risk, you instantly formulate your substantive procedures for the AA exam. This is the time-saving synergy.
Because you just studied the FR mechanics an hour ago, you know exactly what the auditor must do to catch the manipulation.
The procedure practically writes itself. You write, obtain management's calculation of the recoverable amount. Verify the discount rate.
Verify the specific cash flow assumptions used in the value in use calculation.
Right, because you know management might inflate future cash flows to avoid the impairment, so that's exactly what you test.
And you'd add, physically inspect the asset to confirm the true scale of damage or obsolescence.
If you were studying AA in isolation, you'd be trying to rote memorize a generic list of audit procedures from a textbook.
But with the synergy, you're just reverse engineering the accounting standard you just built.
Let's build on that builder and building inspector concept because it perfectly illustrates the second massive overlap, revenue recognition under IFRS 15.
Oh, this is a huge one. On the FRS side, you are the builder. You have to master the formal 5-step model.
It's very rigid. Step 1, identify the contract with the customer. Step 2, identify the separate performance obligations.
Step 3, determine the transaction price. Step 4, allocate that price across the obligations.
And Step 5, recognize the revenue when or as a specific performance obligation is satisfied. FR teaches you the exact architecture.
And as soon as you switch to AA, you become the inspector hunting for cutoff manipulation risks.
Think about a rapidly growing software company. Under IFRS 15, they sign a massive contract. A static software license recognized at a point in time, and ongoing tech support recognized slowly over time.
In management, especially if their bonuses are tied to annual revenue targets, they will try to manipulate that cutoff date.
Exactly. They'll try to recognize the entire contract value up front to inflate their bonus.
But because you deeply know the five-step model from your FR studies, your AA substantive procedures become surgically precise.
Right. Weak students write things like, check the sales ledger, but you, using the synergy, write targeted contract review audits.
You'd write something like, select a sample of major software contracts signed near year-end. Isolate the separate performance obligations per the IFRS 15 five-step model.
Recalculate the deferred revenue balance to ensure ongoing support isn't recognized prematurely. Your FR knowledge is a massive force multiplier for AA.
It guarantees high professional marks because you're identifying the precise accounting standard violation. That is 1 + 1 = 3 in real time.
Okay, so moving from the rules-based execution of FR and AA, we pivot to the evolutionary math of internal operations.
Golden Pairing B, the direct progression from management accounting, MA, to performance management, PM.
Now, this isn't about two different perspectives on the same rule. This is a linear evolution. PM relies entirely on the MA mathematical scaffolding, but it radically shifts the weighting.
You move away from raw arithmetic and heavily into critical narrative analysis.
The clearest technical overlap to show this is variance analysis. In MA, the requirement is almost entirely mechanical.
Memorize the formulas, execute the calculations for material, labor, overhead variances. The exam just asks, what is the variance?
Right. You punch the numbers, find an adverse material price variance of 10 grand, select the multiple choice option, and move on.
But PM demands the advanced calculation of planning and operational variances. The analytical step-up is profound.
PM doesn't just ask what, it asks why. Let's break down a data point. Imagine a corporate purchasing manager.
Okay, so MA data tells us the manager achieved a favorable material price variance by sourcing cheap raw materials.
MA says, good job, you saved money, favorable variance. But PM pulls the camera way back. PM forces you to analyze the operational consequences.
The PM scenario reveals the manager bought substandard, low-quality materials.
Exactly. And what happens on the factory floor, those cheap materials cause machine jams. They require more manual processing,
which leads to a massive spike in labor hours. So now you have a severe adverse labor efficiency variance.
And probably an adverse variable overhead variance from machine maintenance. The PM syllabus transitions the question to, why did the purchasing manager's decision trigger a labor efficiency crisis?
And how does that impact division-wide KPIs? Now, I'm going to stop you here because my instinct as a student would be the exact opposite of seeing a synergy here.
How so?
If PM layers massive narrative analysis over the MA math, studying both at the same time sounds like a nightmare. Aren't I just drowning in double the formulas and double the theory?
It's a highly logical concern, but the data proves the exact opposite occurs.
Doesn't the heavy narrative slow down the math?
No, the narrative anchors the math in your memory. Look, when you study complex variance formulas in PM in complete isolation, it feels like an abstract wall of algebra.
It's impossible to memorize.
Right. But when you simultaneously study the MA foundational math and immediately apply it to the PM operational failure, the why the formula becomes a logical story.
Oh, I see. You remember the labor efficiency formula because you understand the physical story of the factory floor grinding to a halt.
Exactly. Understanding the operational failure makes retaining the mechanical calculations significantly easier. The business context is the glue for the mathematics.
You aren't remembering algebra. You're remembering a business disaster. The math just describes the disaster.
Exactly. Now, while MA to PM is linear, our next pairing is the ultimate executive consolidation, Golden Pairing C.
Strategic Business Reporting, SBR, paired with Strategic Business Leader, SBL. We are completely merging deeply technical corporate reporting with holistic boardroom governance.
The syllabus synergy here is arguably the most powerful in the entire professional qualification. SBR trains you as a highly technical group accountant.
You're handling step acquisitions, disposal of foreign subsidiaries, intense intricacies of IFRS 9 financial instruments.
You are deep in the absolute weeds of the numbers, and then SBL takes you completely out of the weeds and drops you right at the head of the boardroom table.
SBL positions you as a CEO or senior board member evaluating massive, unstructured case studies, internal control breakdowns, commercial viability.
The synergy operates exactly like a hospital hierarchy. Your SBR knowledge is the MRI machine.
It's highly technical, highly calibrated, giving you a pixel-perfect diagnostic image of the company's financial health.
Right, it spots the hidden liability buried in a complex IFRS 9 derivative. And your SBL knowledge is the chief of surgery.
You look at that MRI scan from SBR, and you make the life-or-death operational decision based on that data.
Deep technical mastery from SBR allows you to instantaneously interpret financial statement trends hidden in those massive SBL exhibits.
If you read an SBL scenario about a highly leveraged company entering a new market, your SBR brain immediately flags debt covenant breaches.
You aren't just reading the narrative, you are calculating the threat. If a subsidiary is acquired in stages in the SBL case, your SBR knowledge of step acquisitions spots the creative accounting vulnerabilities.
You're aggressively auditing the commercial reality behind the numbers. And crucially, both these professional papers share identical marking criteria.
Yes, for drafting concise boardroom memos, executive summaries, and stakeholder reports.
If you master the tone and structure to explain a complex accounting treatment to an investor in SBR,
you are utilizing the exact same communication framework to explain a strategic risk matrix to the board in SBL.
you are writing one memo, but training for two distinct professional exams.
Okay, so having mapped out the approved combinations where 1 + 1 = 3, we have to pivot. We've identified the synergies. Now the data dictates we identify the trap.
The blocked combinations. The data sets off massive red flags when we look at pairing performance management PM with financial management FM.
This is a combination that mathematically guarantees a cognitive crash due to severe structural friction.
It is the ultimate burnout trap. On the surface, they carry the heaviest individual workloads in the applied skills tier.
But the volume of content isn't the actual problem. The problem is the fundamental conflict in how they train you to think.
They pull your cognitive focus in two completely opposite analytical directions.
Let's meticulously contrast these two across 3 specific friction points. Friction point 1 is operational direction. PM is strictly internal and micro-focused.
Your mindset is inside the walls. You're analyzing the efficiency of a single division, negotiating internal transfer pricing disputes.
Your universe is the factory floor and the management office. But financial management FM is entirely external and macro-focused.
You have left the building. You're adopting a corporate finance perspective, looking outward at the volatile global market.
Raising millions in debt or equity, evaluating stock market dynamics, running corporate valuations, assessing global macroeconomic risks.
Which brings us to friction point 2, core methodologies. Because the operational directions are opposite, the analytical tools are incompatible.
In PM, you use throughput accounting. Granular focus on physical manufacturing bottlenecks, finding the exact machine slowing down the assembly line.
You're building linear programming models, managing complex variant systems. It's deeply physical.
Take that mindset and switch to FM. You use entirely different abstract mathematical frameworks.
In FM, you're running net present value, NPV appraisals, discounting multi-year cash flows, calculating the weighted average cost of capital, the WACC.
Blending the cost of equity and debt based on market risk premiums, executing complex currency hedging strategies. The toolkits do not overlap.
Worse, they actively interfere with each other, which explodes at friction point 3, exam question style.
PM questions are highly abstract and theoretical. Deeply nuanced multiple-choice questions testing minor exceptions to theoretical rules.
The examiner is trying to trick your logical reasoning within internal operations. You have to read every word.
But FM is the complete opposite of that abstract nuance. FM demands rigid, multi-step mathematical formulas.
Precise, structured layout calculations like building a 5-year NPV table prior to any narrative evaluation. You are penalized heavily for sloppy formatting.
So to summarize the conflict, internal micro versus external macro, physical throughput accounting versus abstract WACC theory.
Abstract MCQ nuance versus rigid mathematical tables. Okay, let me challenge this directly. Let's say I'm a highly disciplined overachiever.
Okay.
I am pulling my 25 hours a week of uncompromised study time. I have the capacity. Why can't I just brute force the compartmentalization?
What do you mean?
Like build a schedule where I dedicate internal micro, PM, entirely to Mondays and Wednesdays, and then external macro, FM, entirely to Tuesdays and Thursdays. Keep them totally separate.
Because the human brain does not function like partitioned computer hard drives. You cannot just switch operating systems without lag.
You need processing time.
Yes. When you're learning highly complex, unfamiliar frameworks, your brain requires passive processing reviewing time to consolidate the information.
So if I spend Monday night deep diving into throughput accounting,
Your brain needs Tuesday to build those neural pathways. But under your schedule, on Tuesday, you force a violent context switch. You flood the system with foreign exchange risk and WACC.
I'm constantly interrupting my own brain's filing system.
Exactly. You interrupt the consolidation process. This is the definition of cognitive overload. Despite putting in 25 hours, your retention rate plummets.
I'll be sitting at my desk on Sunday, conflating internal cost of capital concepts with external pricing ratios.
You'll try to apply an NPV discount rate to a transfer pricing problem. The structural friction leads to systematic failure, regardless of the hours invested.
The data is definitive. PM plus FM is a prohibited pairing. If you attempt it, you are actively choosing the path of maximum resistance.
So with the traps identified and the synergies locked in, we pivot to execution.
You've qualified via the time and baseline metrics. You've selected a golden pairing. Now you must deploy. There are 3 specific tactical steps for immediate implementation.
Step 1, mindset and momentum. You must stop all post-exam analysis of previous windows immediately.
Do not wait for results day.
Right. If you just finished an exam window, you possess active, exam-conditioned mental momentum. Your discipline is calibrated. You're used to focusing at a desk.
If you pause for a 4-week post-mortem, anxiously waiting for a notification, that momentum completely decays.
It takes weeks to rebuild. Capitalize on the conditioning you have right now. Transition straight into the dual prep syllabus on day 1.
Step 2. Implement an audio-first strategy. We are explicitly highlighting the SmartPass ACCA Prep YouTube channel here.
You need to subscribe to their platform and utilize their Listen Anywhere audio-first strategy podcasts.
These are specifically designed to replace dense textbook slides and exhaustive reading.
And this is critical for maintaining that 15 to 20-hour metric. When you're a professional pulling study hours on top of a high-stress corporate job, you cannot afford dead time.
You can't only study when you're sitting perfectly still at a desk.
The Listen Anywhere strategy lets you convert commute time, driving, transit, gym time into actionable, high-yield study hours.
Absorbing the synergies passively. So when you finally sit at your desk for active question practice, your brain is primed.
You skip the reading phase entirely and jump straight to application.
Step 3. The synergy map. You must direct yourself to the Gumroad store right now. Download the interactive SmartPass 2 paper synergy map and complete study tracker.
This is not just a calendar. It's a highly detailed, mechanical layout of exactly how to execute the overlaps.
It provides the operational blueprint for the 12-week window.
It tells you what granular topic to study on day 1, how to align the overlapping standards, like matching IAS 36 to the AA procedure by day 15.
And it dictates when to transition away from learning and into full mock exams by day 45.
To execute a flawless double pass, you have to completely remove decision fatigue. The tracker dictates the alignment, so your cognitive energy is spent entirely on mastering the material, not planning.
It is the ultimate execution tool. We are synthesizing everything down to this reality. There's a massive difference between working hard and allocating cognitive resources efficiently.
Brute forcing random exams like PM and FM is working incredibly hard, and it leads to failure. Exploiting syllabus overlaps via the golden pairings is efficient capital allocation.
And looking at this data leaves us with a final point regarding your broader professional development.
Yeah, we just spent a ton of time analyzing the severe structural friction between internal management accounting and external corporate finance in a study plan. Think about the implications.
If a professional accountant lacks the strategic insight to recognize and avoid that structural friction in their own personal study schedule,
How can a board of directors possibly trust them to manage those competing complex frictions in a real multi-million-dollar corporate environment? The strategy you use to pass the exams is the exact same strategy you will use to run the business.
a metric to optimize, an overlap to exploit, and a map to execute. Execute the strategy.